Stocks were down again, and I was down as well. So today we're going to talk about how my portfolio did in the past day, as well as the stock that I've been talking about that's been up almost 200% in the last 5 years that I was actually finally able to buy today or yesterday on a very small dip, and I'm very optimistic about it for the coming years. So let's get into my portfolio. You have AbbVie down, Starbucks down, JP Morgan, FedEx, Otter Tails, Boeing, Pepsi, 3M. So a couple stocks that are up, but mostly down. United Health, Southern, Verizon, Microsoft, Medical Properties Trust, Iron Mountain, ExxonMobil. And then the stock that I recently bought is MasterCard. I just bought this, and it is a stock that I'm sure most of you have heard about, or a company that most of you have in your wallets and maybe sometimes don't even realize it. You guys know I own Visa. I also own Square on my M1 Finance portfolio. And as you can see, in the past 5 years, it's been up almost 200%. And the way that MasterCard makes money is that they take a small fraction of each facilitated transaction with one of its cards. So MasterCard processes over millions of payments every day, and it gets to take a piece of each of that action along the way. Had its initial public offering IPO in 2006 at $39 a share. And a common misconception with MasterCard is that MasterCard has the liability of customers defaulting. And that's actually not true. It's here's a snippet straight off their latest 10K. It says, "We do not issue cards, extend credit, or determine or receive revenue from interest rates or other fees charged to account holders by issuers, or establish rates charged by acquirers in connection with the merchant's acceptance of our branded products." So this means that it's not MasterCard's responsibility to determine if they should lend out credit or borrow money. It's actually the institution, and they just use MasterCard as kind of a middleman or third party to facilitate that transaction. So they're not like Chase Bank, who actually needs to run a credit report on somebody to determine if they are a worthy borrower. And just in the last year, they've had a 15% increase in their adjusted earnings per share. Their earnings per share grew to $1.55. And that is a 36% increase over last year's fourth quarter. And then MasterCard's also been busy adding a number of security measures, reward programs, tons of data analytics on this whole company. Just, they're able to see kind of consumer trends and what they're buying. And that just all supplements their core network, providing MasterCard that they've been able to provide returns that have been double over the S&P 500 over the last 10 years, ever since this bull market has continued. And it doesn't seem like it has any signs of slowing down here. MasterCard operates in over 210 countries. And believe it or not, this still surprises me, but most places around the world still use cash for most transactions. Even in the US, a lot of places still use just cash. And this is quickly changing as more countries start to go digital and electronic. And I personally think this is a much safer option. I absolutely hate having cash on me. Like, I never have more than even $20, $40 in my wallet. I just love to use my actual card. I just think it's easier. I think it's much more safer too. It avoids the risk of people mugging you, or in case there's an issue with the cashier. And I just think I'm with most millennials who hate carrying around cash, and they usually just always have card. And this might also prevent money laundering, as most illegal services are done with cash, or at least might make it easier to expose this as well. And MasterCard just has a very powerful business model, which is what I really like about them, is that they're like a tollway where they just pass through MasterCard to get what they're looking for. Most people probably don't even realize that they're paying a small fee, just as merchants built in that extra price on the good and service. They pass that on to the customer. So customer might not even realize that they're paying extra or giving a small portion to MasterCard. Unlike a toll on when you're driving on the highway, you always know that you're paying that extra little bit of toll. And MasterCard just bought TransFast, which specializes in cross-border money transfer networks. And this will allow for them to have more transaction internationally, to be more transparent, and fix problems that might arise when you're doing money transactions across borders. And they can continue. A problem with MasterCard, possible con with them, might be that it's hard to do business internationally in places where there's strong government regulation. So that's actually already happening in China. More of these countries might want to promote countries that are domestic and want those to succeed rather than somebody coming from overseas and interfering with their economy. And as far as dividends go, MasterCard only pays a 0.59% dividend, which is extremely low, but not many companies in this industry even pay one. So I can't knock MasterCard too much on that. Only 20% of its earnings goes out to shareholders, which means the rest of that money gets reinvested back into the company to grow. And there's obviously room for them to continue raising that dividend over the years. Definitely not a stock to own if you're only interested in dividends. Their total assets is $24 billion compared to total liabilities of $19 billion. So not the cleanest balance sheet in the world, but it's definitely not bad. They had almost $6 billion in profit last year, up from $4 billion the year before that. And analysts have their earnings per share projected at 1.67 for Q1 19. So definitely a stock very bullish on for the coming years. Definitely a good growth stock to just have in your portfolio. Like I said, I already own Visa and Square, and I definitely see this stock continuing to do well as we kind of make that transition from cash to more electronic sorts of payments. And if you guys have any more cons on this stock, another con I can see is that it's very overpriced right now. I'm not sure when we'll have another dip, but I just wanted to, have those dollars working for me right now. Definitely overpriced. Its PE ratio is almost 40. So that might be a thing you want to take into consideration, but I just wanted to get in on the stock. If you guys have any other comments, please make sure to leave them, as well as a like and to subscribe, and let me know what else you guys would like to see. Thanks, guys.